Ever walk down an Australian high street and seeing that bright yellow and black logo, the one with the Southern Cross? Or maybe you've heard whispers of the CommBank. But do you actually know what it is? What it does? And why it matters, not just to Australians, but potentially to you? That's what we're diving into today. We're unpacking the Commonwealth Bank of Australia, or CBA, and giving you the complete lowdown. Now, before we jump into the specifics, let's zoom out for a second. Every modern economy relies on a robust banking system. These institutions are the lifeblood of commerce, facilitating everything from your morning coffee purchase to multi-billion-dollar international trade deals. They hold our money, they lend it out, and they manage the flow of capital that keeps the economic engine running. In Australia, like many countries, there are a handful of major players that dominate the financial landscape. These are often referred to as the Big Four banks. And guess who's consistently at the top of that list? You guessed it, Commonwealth Bank. So, what exactly is Commonwealth Bank? Simply put, it's the largest bank in Australia, offering a full range of financial services to individuals, businesses, and institutions. Think of it as a one-stop shop for all things money. But to truly understand CommBank, we need to go back to its roots. The bank wasn't born in a boardroom, it was created by the Australian government in 1911. This makes it quite unique. It was established with a clear national purpose, to provide banking services to a newly federated Australia and to support the nation's economic development. Imagine Australia in 1911. It was a young nation, just a decade after federation. Establishing a national bank was a crucial step in building a strong and independent economy. This government backing gave CommBank a significant advantage from the start, fostering trust and stability. For much of its history, Commonwealth Bank operated as a government-owned entity. This meant it played a key role in implementing government economic policy, particularly during times of crisis like the two world wars and the Great Depression. It was more than just a bank, it was an instrument of national economic management. This public ownership model continued for many decades. However, in the 1990s, a major shift occurred. The Australian government began a process of privatization, gradually selling off its shares in the bank. This culminated in full privatization in 1996, transforming CommBank into the publicly listed company we know today. This privatization was a significant turning point. It meant the bank was now subject to market forces, answerable to shareholders, and driven by profit maximization. This change brought both opportunities and challenges. It allowed the bank to become more agile and competitive, but it also placed greater emphasis on shareholder returns. Now, let's delve into what CommBank actually does. As a full-service bank, it offers a vast array of products and services. For individuals, this includes everyday banking accounts, savings accounts, home loans, personal loans, credit cards, insurance, and investment products. Basically, anything you need to manage your personal finances, CommBank likely offers it. For businesses, the range is even broader. This includes business banking accounts, loans, merchant services, trade finance, and specialized financial solutions for different industries. Whether you're a small startup or a large multinational corporation, CommBank has services tailored to your needs. One of the key areas where CommBank has excelled is in technology. They've invested heavily in digital banking, offering user-friendly mobile apps and online platforms that make managing your finances incredibly convenient. This has been a major factor in their continued success, particularly in attracting younger generations. Another important aspect of CommBank's operations is its international presence. While its primary focus is Australia, the bank also has operations in other countries, particularly in the Asia-Pacific region. This allows them to facilitate international trade and provide financial services to businesses operating across borders. Now, you might be thinking, why should I care about an Australian bank? Well, there are a few reasons. Firstly, understanding the role of major financial institutions is crucial to understanding how economies work. Commonwealth provides a valuable case study of a bank that has evolved from a government-owned entity to a publicly listed company. Secondly, Commonwealth's size and influence make it a significant player in the global financial system. Its performance can have ripple effects beyond Australia's borders. And thirdly, if you're interested in investing or simply curious about the world of finance, studying successful companies like Commonwealth can provide valuable insights. But it's not all sunshine and roses. Like any large organization, Commonwealth has faced its share of controversies over the years. These have included issues related to financial planning, lending practices, and customer service. It's important to remember that no institution is perfect, and scrutiny is essential for maintaining accountability. So, to recap, Commonwealth Bank is the largest bank in Australia, offering a comprehensive range of financial services to individuals, businesses, and institutions. It was established by the Australian government in 1911, privatized in the 1990s, and has since become a major player in the global financial landscape. It's a key part of the Australian economy and a fascinating case study in the evolution of modern banking. With that said, thanks for watching, and until next time.